Bureau of Statistics today released the country's inflation report for the first month of the new year. Briefing the media with the latest consumer price data was the Statistician General, Simon Harry. Take a quick listen.
Core inflation for January 2022 was 13.87%, while at that of December, and incidentally the figure happened to be the same, also was 13.87%. Food inflation for January 2022 was 17.13% compared to the figure recorded in the month of December 2021, which was 17.37%. Urban inflation rate, as earlier mentioned, stood at 16.17% year-on-year during the month of January 2022. And incidentally, the figure again was the same with that of December 2022 figure, which was also 16.17%. On the other hand, rural inflation was 15.06% and 15.11% in the month of January 2022 and December 2021, respectively.
Okay, let me get a bit of insight into this. So, Tosin Odukoya, co-managing partner at Comercio Partners. Of course, Comercio Partners had forecast that Nigeria's inflation will resume its trend of moderation in the new year. Thank you so much. This is our first meet in the new year. Good to see you, Tosin. This is consistent with your report, which came out just a few days ago.
Yeah. Actually, this is not a surprise to us. We expected that there's going to be some moderation going forward into the year. You would agree with me that the blip we experienced in December was as a result of, the spending pattern and the level of economic activities.
You folks went to town in December. It's surprising. POS transactions, online transactions went into about ₦1 trillion. Nigeria went on a spending binge, which you folks were not able to do in 2020. So you're packing everything together in 2020.
In spite of COVID, right?
In spite of COVID, by the way.
So, prior to December, all right, inflation was actually on a moderate level. And we expected that would continue into the new year, obviously because of the base effect. So for us, going into 2022, we expect that the base effect would kick in, and it has started already. You would see the moderation from 15.63 in December to 15.6 this year, in January. And going into February and March, we continue to see the disinflationary trend. And obviously, by quarter 2, quarter 3, you might see that trend reversing.
Inflation will start heading higher towards third quarter. That's kicking into the election period.
Yeah, so a number of factors will be responsible for this. Obviously, you've seen the rise in energy prices. Okay, that should kick in as well. You've seen, poor harvest. I believe that's going to, happen during the course of the year. And more importantly is, the potential FX weakness. Everybody's expecting that there could be a potential weakness as we move into election period.
There's always money to be spent during the election period. Would that be a major factor?
Yeah, there will be. Obviously, you've seen the budget deficit. I'm not surprised that it's about 6 trillion. Recently, again, I think it was today, the president signed another 2.5 for the removal of fuel subsidy. So you begin to ask yourself, with this amount of money to be spent by the government, that could potentially give us some inflationary pressure.
And that will keep Godwin Emefiele and the rest of his team awake at night.
Yeah, obviously. And again, the next MPC is coming in March.
Yes.
You would expect that the central bank should be mindful, just like the central banks globally and the reserve banks of the world.
Yes, the BOE, the ECB.
Everybody is concerned right now with inflationary pressure. I mean, US just witnessed about 7.5. That's 7-year high. In England as well is the same thing. So right now, but in bringing it home, I think that in March, yes, we will be mindful of inflationary pressure, But I think more importantly, the central bank will be looking at how to continue to stimulate economic growth.
What's your outlook on interest rate direction this year? What will it mean for the market? And how should investors position themselves for what lies ahead?
Well, so inflationary pressure still still pivotal to interest rates or, direction of yield on government securities. If you expect about 6 plus an additional 2 trillion to be funded, whether funded locally or funded by multinational or bilateral, organization, that means that at some point you will see the reversal in interest rates on government securities reversing. And if that happens, what that means is potentially is the return on your assets will begin to, to dwindle. Not only that, you also see assets repricing globally, not only even in Nigeria. But if you're talking about repricing of assets in Nigeria, what that means is that the return you get on fixed income in the local market, you begin to ask yourself that, am I in a comfortable position holding some of these securities at this moment? We don't see that happening. We expect that people should be aware of the inflationary pressure that could potentially erode your return.
We just spoke with the IMF country rep for Nigeria and was talking about the big macro environment. Give me the macros from commercial partners. 2.6 was some folks were talking about. 2.4 for some folks. What's the number?
Yeah, we're expecting about 2.7. IMF and the World Bank, they are posited about 2.5 and 3%. I think that we might struggle. Why? Because the oil sector hasn't really lived up to expectation. You would expect that even in spite of crude oil prices moving up, we should have some accretion to our reserves, but we've not been having that. That is obviously due to the strain we have on production. So that leaves us with the non-oil sector. The non-oil sector, I think, should come to support.
So this global oil price rally of almost $100 is a waste?
Well, potentially we're not really benefiting from it because of our production level. Our production level is about 1.4 million barrels, as opposed to 1.68 that OPEC had given us, and we're not really benefiting from that. So that leaves us to non-oil sector. Obviously, the last, I think it was 2 days ago or 3 days ago or last week, that the central bank came up with an initiative to see how they can promote, export earnings. I think that could potentially, promote non-oil sector. But again, we don't have
looking at the supply side.
Yeah, but obviously we don't have the modalities of that. Until that is happening, we might not see the impact of that.
What's your economic expectations as contained in your latest report, just to summarize it?
Well, at Commercial Partners, we are always very positive. We believe that in spite of, the eve of election and oppression around election and political risk, we believe that we will continue to see some positive growth. However, it's still going to be marginal. We think that it should be within that 2 or 2.6 or 2.7 at the very most in the year.
All right. Thank you so much for your time.
You're welcome.
Have a blessed evening and see you next time.
Thank you.
Tosin Odukoya, co-managing partner at Comercio Partners Limited.